Okay guys, so welcome to the 9th of May Amplified Trading morning briefing, and I'm going to be talking about this man. Donald Trump delivered perhaps arguably the most significant decision of his presidency so far, by of course removing the United States from the Iranian nuclear accord. And this is the big news. We're going to be looking at how the price of oil, how the value of the dollar, and how generally global markets have responded to this. We'll be talking about what happens next with this situation, because you've got 5 other countries who were part of this deal. It's not just a deal between the US and Iran, of course. You've got the Europeans, the UK, the French, the Germans, you've got the Russians, you've got the Chinese all involved in this deal with Iran as well. So what's going to happen next? We'll sift through the initial reaction in markets. We'll also be talking about other things. It's not just about Trump, although I have to say, of course, it's dominating almost every front page probably around the world this morning. But there are other things. A bit of a defeat, another one in the House of Lords for Theresa May on Brexit yesterday. So we'll be touching on that and looking at the day ahead. Okay, so that's the plan of action. Let's get to it by looking at the charts. And well, actually, before we do that, let's perhaps just skip back and have a look at some of the headlines that, of course, we're seeing this morning. So here's Donald holding up his signing off of kind of waiving this deal, and this was an election campaign promise. Of course, he promised to back out of this deal. What was interesting politically about this, of course, is this deal was one of Obama's kind of major victories. This was a kind of absolute cornerstone policy for Obama's Democratic presidency, and so of course during the election campaign Trump was rubbishing this deal and promising to pull out, and now he has. So where do we go? Because I mean, this deal then, well, firstly, what he's decided to do is pull out and reintroduce sanctions on Iran. Now, to start with, let's think about timings here, because these sanctions aren't going to be implemented immediately overnight. He has talked about a 6-month period of consultation with businesses and other governments, with the idea that in 6 months' time these sanctions are fully implemented. That's US sanctions on Iran. Now, here's the funny thing though, because we often talk about, obviously crude oil is a key here, and let's a couple of other headlines, but let's look at this chart, which is perhaps the most interesting. Let me just make that a bit bigger. So this is looking at Iranian crude oil production versus Brent crude oil prices. Now, what happened was that back in 2011, due to Iran's, or what the West considered to be Iran's furthering efforts to create nuclear weapons, sanctions were implemented. These were economic sanctions, quite broad, quite sweeping sanctions. One area of those sanctions in particular was no longer importing Iranian crude. So you had a huge portion of the world, certainly Europe and the US, now refusing to import Iranian crude, and so Iranian crude production dropped sharply as a result of this, because they had no buyers anymore. These sanctions were then lifted back in 2015 as Obama kind of led that push towards nuclear inspectors moving into Iran, making sure that they'd demobilized all of their nuclear weapons efforts. And apparently, according to the experts, this is they're still fulfilling their side of the bargain. Iran, that is, according to the nuclear experts, they have continued to kind of dismantle and cease the production of nuclear or industrial grade uranium for potential weapons usage. So what's happened, of course, as sanctions got lifted, Iranian crude production goes back up. This was one of the things that actually helped to push the price of crude oil lower through 2015, and as we hit 2016, the price of crude oil dropped down to $26, of course. So this was upside supply as a result of sanctions being lifted. Now, of course, sanctions are back on, but here's something you need to understand. Do you know how much oil the US import from Iran? How much Iranian crude oil does the US buy? Well, the answer to that is no barrels at all. The US doesn't buy any oil from Iran. They are able to produce enough and then source oil from more friendly allies, let's say, so Mexico and Canada, obviously right in the vicinity. They're buying off the likes of Saudi Arabia. They don't buy any oil off Iran. So actually, what are the US saying here with these sanctions? Well, actually what they're saying is that the US intend to penalize anybody else who does not reduce the amount of imports of oil that they take in from Iran. Okay, so this is where this decision becomes highly uncertain and dangerous, because you've got European countries buying Iranian crude. Now, what happens if these countries do not now reduce the amount they're buying? What does the US do? Are they going to penalize European countries for that? And in what way? Would there be sanctions implemented on European countries? And then, of course, this takes us down a path where we've never been before for generations in terms of the relationship between the US and Europe. So it is potentially a pretty game-changing decision. However, this is Trump's style. He likes the shock and awe of it, of course. So he likes to get the bat out and be aggressive and threaten the whole full Monty. And then once he's threatened the full Monty and everyone fears that the worst is going to happen, he tends to then try and negotiate and get a better deal so that the opponent feels like they've got a good result, because now the worst case scenario doesn't happen. So anyway, look, we've got 6 months here as these sanctions get implemented, and we're going to see the size and scale of it. What about all the other countries, of course, because you've got the UK, you've got Germany, you've got France, you've got China, you've got Russia, all part of this deal. And those 5 countries have all said they intend to actually maintain this arrangement with Iran. Iran have countered last night by saying that they are going to be discussing this with the 5 other countries and are, happy to continue the deal. However, they also have threatened that they are immediately prepared to start ramping up the industrial grade production of uranium if needs be to counter Trump's move. So certainly this opens a big can of worms and a period of uncertainty ahead as this all plays out. So let's have a look at how markets have reacted. Here's the chart of crude oil then. I'm just going to zoom in on yesterday's, or the last sort of, let's say, 24 hours, because it's been a pretty interesting roller coaster. Let me make that chart a little bit bigger. So this is the last, you can see yesterday and now, of course, this morning. And so yesterday, the market, well, let me get back a little bit more, because I want to just bring in that top that we had back on Monday. So this was the new 4-year high here set back on Monday, the 7th of May. We touched at $70.84. This is WTI crude. Then we chopped back, consolidated, big move to the downside yesterday. So big kind of fallout, big technical breach. This is before, sorry, this was after, apologies. No, sorry, let me get my timings right. It was 2 p.m. Washington time that Trump made his announcement. So 7 p.m. on this chart. So we had a big correction lower for crude into the European close yesterday. Perhaps people speculating, well, maybe Trump isn't going to pull out of this deal. Technically, there was profit taking as well. So a lot of people have been very long crude and have chosen to book profit just before Trump made his announcement, just in case he decides to stay in the deal. So a bit of risk coming off the table. Technically, this led to a nice big breach, but of course it stabilized. Then Trump announced that actually we are pulling out. So big spike back to the upside. We tested the high of the day, consolidated, and then ever since then, which is whatever, how many hours, 15 hours or so, oil has been marching higher. We've taken out Monday's high. This is a new 4-year high this morning. We've tested 71 bucks, tested R1. Okay, so this is crude responding, and this is a huge move given that yesterday afternoon at 4 p.m. we were down at 67.63, and here we are now north of $71. So big move to the upside. What I would say about this medium term, let's go to a daily chart. Don't forget that crude's been pushing a hell of a lot higher in recent months, as you can see from this picture. Let me add in a few lines here. I was talking about this yesterday. In February, we were trading down at $58. So, you know, we're $12 higher. This is a huge move over these kind of last few months. So do bear in mind that to a degree, a lot of this risk of the US pulling out of the Iranian deal it is already priced in. Don't now expect a massive spike to $80 and more, okay? So what will happen? Well, Iranian crude may well get impacted. You might see a global supply drop if those countries that are importing Iranian crude decide to listen to the US and reduce their imports. However, we've already seen Saudi Arabia coming out and saying, actually, you know, if Iranian crude supply gets damaged, we will replace that by increasing the supply of Saudi Arabian crude. Of course they're going to say that. This is perfect from Saudi Arabia's point of view. They've been urging Donald Trump to pull out of this deal ever since he became president. This is perfect scenario. And so Saudi are happy to, and they have spare capacity, they're happy to ramp up production if needs be, to stabilize the global supply, to keep and maintain prices stable. Also, you've got the Americans talking to US oil producing companies, discussing strategies of how they can continue to increase production. Although I would say that's tricky because we do have what seems to be a bit of a bottleneck in terms of piping a lot of this shale crude from the production sites out to refineries and so on. So there does seem to be a bit of a bottleneck there. So I'm not sure how much near-term upside we can expect from US producers, but certainly Saudi Arabia have some spare capacity. So, you know, I would say from a global supply point of view, this shouldn't actually have too much of an effect to start with. I think, of course, this brings and ramps up geopolitical risk. Obviously, Israel and Saudi Arabia are very happy about this decision. Most of Europe, of course, are not happy about this decision. And how this further destabilizes the geopolitical situation in the Middle East, we're not sure. So that carries uncertainty. That does increase supply risk. So, you know, I would certainly say the price of oil can continue to trend higher. I was talking about $75 yesterday. Let me go to a monthly chart to show you why. $75, if you go back to October 2011, was the low, the 2011 low, $75. So I think WTI could trend to that kind of price area in the coming weeks. But unless something else and something more happens, I don't necessarily think crude's going to go to $80, and I think actually Saudi Arabia wouldn't allow that, because don't forget, if crude prices do continue moving higher at this current rate, well, then you've got other economic problems that brings. And that brings problems via, obviously, energy costs increasing, which provides a headwind for global growth. But also, it's going to continue to drive this inflationary trend that is leading to potentially the Fed hiking rates faster, for example. It's certainly fed into dollar strength. And we'll talk about US bond yields before the end of this briefing as well. So oil prices much higher. If oil prices go higher fast, it does present then economic problems, which can then damage the demand side picture, which naturally can then be a negative counterbalance. So it's a tricky one. What else has happened? I mean, looking at other markets, other assets. Well, firstly, from an equity point of view, the S&P right now is trading just broken up above yesterday's high, in fact. And we've just broken a bit of a trend line that I had on this chart. So US equities are higher. Obviously, energy companies have benefited from this development as the price of oil has gone again to make another new 4-year high. So energy stocks perhaps leading this equity upside this morning. Currently, the global equity space not too concerned about the geopolitical risk that this decision creates, whether that's complacency, I don't know, we'll see. But at the moment, stocks are fairly happy and are actually mildly positive on the session. What's way more interesting is what's going on over in the FX space. This is well, let me show you a 240-minute chart of euro dollar, because we've got a great trend line on the go here over the last few weeks as this market has dropped very sharply and continues to do so. Another new low this morning. Certainly what seems to be happening here is the dollar is loving life. It's been a great month or so. Huge gains for the US dollar. Yes, some of that is as a result of the thinking about the Federal Reserve and rate hikes and a strong US economy and inflation ticking higher and all of these kind of things. Yes, that is the case, but it's got to be more than that as well. I don't know. I'm seeing what some of the analysts are saying in the press this morning, and all anybody can kind of sheepishly suggest is that this is safe haven flow into the dollar because of a ramp higher in geopolitical risk. I'm not sure I buy that, to be honest. I'm not sure I buy that as a reason for why the dollar's been so strong. I mean, I think most likely the reason for this is because the dollar was too weak. If we go to a daily chart, I think definitely the dollar was way too weak. If you look at the start of 2018, when we did the reverse of what's happening now, big rally in euro dollar as the dollar weakened, then we consolidated for a few months, and now we've just chopped back down to where we started. And actually, we were trading these levels back on 19th of December. So we're kind of back to December levels here. I would look at this more as the dollar was too weak up at 124 area, and perhaps now this is a more sensible price point when you're thinking about monetary policy differentials and so on. So I think a lot of this move is about the fact the dollar was too weak, and then yes, you've had some dollar strength perhaps as well. I mean, certainly when you're looking at, obviously oil's doing its own thing, but looking at the other commodity spectrum and looking at gold here is quite interesting. This morning as I speak, in fact, we've broken down below yesterday's low. And if I show you the daily chart, I was talking about this yesterday as well, because 1303 is a critical price point. This is the year's double bottom. So the 1st of March low, and then the low point again that was set on the 1st of May, down at 1303. So we're about to go down and test that, it would seem. So gold at the moment, not interested, you know, because on the face of it, if the dollar's rallying because of safe haven flow, well then shouldn't that be a positive catalyst for gold? If there was a safe haven move here, shouldn't equities be selling off? And that's not happening. So this is why I don't buy that argument in the press about dollar strength being safe haven bid. You know, I think currently gold's moving lower as a result of dollar strength. At the moment, there's no real panic around the geopolitical risk here in other assets. So certainly the dollar seems to be the dominant force here. Let's just have a look at the pound against the dollar. So we haven't broken yesterday's low. Sorry, not yesterday's low, last week's low on cable. Euro dollar has. However, having said that, we have had bad news, you might say. If we just flick the screenshot, have another look at the one of the articles, key articles in the FT this morning, looking at the Lords vote. This is in the House of Lords yesterday, where they again defeated the government's Brexit bill. And I've highlighted what's happened here. So the Lords defeated the government on 3 other amendments. So one would allow Britain to remain part of EU agencies. Another would remove the fixed date for Brexit from law, thereby making it easier for the government to extend negotiations. The key one, of course, was that they want to keep Britain inside the European single market and have some kind of Norway type deal. Okay, so this is definitely not what Theresa May wants, although what Theresa May wants, or perhaps more importantly, what does the Conservative cabinet want, we don't know, because they're a massive split and divide over what to do about this. What does Labour want? Well, they don't really know either. So nobody really knows what they want, and the Lords in the meantime are saying we want as soft a Brexit as is possible. So another defeat, not surprising, I would say. So you haven't seen sterling get impacted by this yesterday in any particular way. Although, of course, if I go to the daily chart, you know, these kind of things have been priced in, although most of this move to the downside for the pound is more about really bad economic data over the last few weeks and the idea that the Bank of England are no longer going to hike rates tomorrow. So keep your eye on sterling. Definitely the 135 handle. We're still camped out around this 200-day moving average. any move below 135 today should open the door to another sort of technical extension lower. So keep your eye out for that. All right. Other news. I talked about Argentina yesterday. I talked about emerging market currencies coming under a lot of pressure as a result of US yields climbing, as a result of the dollar strengthening. What's happened this morning is that, or yesterday, or I should say, or overnight, Argentina have now officially asked for assistance from the IMF and to help them out as the peso sell-off resumes. So keep your eye on that story. Other things going on yesterday, more good news on the jobs front from the US with the JOLTS job opening figures coming in a record level, so further indication the labour market is solid as we move towards that June Fed meeting where we're expecting the next rate hike. Let's just finish on yields. I mentioned yields. So this is looking at the US 10-year yield, still knocking on the door of 3%. We did briefly edge above it, but we've been around 3% over the last sort of week or so. And as it stands, no breakout above that. But of course, as oil moves higher, this is inflationary, which does lead to an upside catalyst for US longer duration bond yields. Okay, so all this is interlinked. You know, Trump's move here, if it does set another leg higher for the price of oil, could be a catalyst that drives the US 10-year yield above 3%. That's going to help the dollar's value, make that stronger. That's also then going to put even more pressure on this emerging market space and emerging market exchange rates and emerging market companies with US dollar denominated debt. So it's kind of all interlinked here. This is why Trump is playing a dangerous game. So keep your eye on yields. And to give you a comparison, this is the US 10-year yield and how it's been behaving over the last couple of years. If we're having a look at the German yield here, well, in the same, well, this is slightly zoomed in, but certainly in 2018, German yields have dropped off that high up at 0.76% and dropped back to kind of 0.55 and actually back to the kind of the yields we were trading back in January. So you've had another divergence here between US and German yields, and that spread has widened again. Okay, so that's what's happening. That's what's happening out there. We'll keep an ear to the ground on any news flow. Of course, Trump, Iran, all the other 5 countries. We haven't really heard from China or Russia yet in terms of what they think about all of this. So keep your ear to the ground on any headlines around that, of course. Let's just have a look and finish on the data calendar for today. And let me just move down. The big thing this week is definitely tomorrow's session, where we're going to get some US inflation data. We've got the Bank of England's rate decision, of course. This is looking at today. What we've got left is some retail sales data from Italy at 9. None of this is massively important. UK 10-year gilt auction at 10:45. Got some Irish data in the afternoon. We've got a kind of bit of a warm-up on the inflation side, a warm-up for tomorrow, because today we got US producer price inflation, US PPI inflation, but the more important one from a market's point of view and the Fed's point of view will be on the consumer side. So tomorrow we'll get US CPI data, but we do have some inflation-related data from the US this afternoon, and then we'll have the Department of Energy numbers coming at us as usual Wednesday at 3:30 p.m. We do have a 10-year auction in the US as well, bear in mind. Right, I think that's it. I think I've covered off everything. It's definitely a Trump story, and Trump likes nothing more than the whole world talking about him. So Donald in the headlines. Enjoy the session. Thanks a lot.